You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again here for Education Wednesday time once again for Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Remember, a bunch of shows coming at you outside of just Bootcamp. And we love Education Wednesday, Bootcamp, Options Playbook Radio, two great core programs here on the network. But of course, you're missing out on the Option Block, Volatility Views, the Advisor's Option, This Week in Futures Options, Crypto Rundown, you name it. Whole bunch of good stuff going on here on the network throughout the week. So, of course, make sure you're listening to the full network. If you're not, you can get the full network feed wherever you're getting. The Bootcamp feed is available pretty much on every platform under the sun at this point. It is kind of ridiculous how many outlets carry our stuff. And then, of course, if you want to go above and beyond, get more in your ear holes, then, of course, we have our exclusive pro Q&As. We have our exclusive Options Oddities program. We have exclusive giveaways coming up. We're giving away the June Options Insider Pro Trading Crate. You had to be active in June to be eligible for that one. But, of course, you can get your hat in, or I should say get your name in the hat for the July crate coming up, as well as get access to this show, everything else we do live throughout the week, theoptionsinsider.com/pro, or for you cool kids, /secret club. But don't tell anybody. If I sound a little bit different, it's because I'm coming at you from the southern studio there. I got the heck out of Dodge a little bit. Maybe that was the wrong choice, because I also have come down with the modern plague now after having dodged it for 2+ years. Thankfully, I seem like I'm coming down the tail end of it now, so my voice has mostly returned. I don't break down into coughing fits every few minutes on the air like I was doing on the shows on Monday and stuff. So a little bit better. Hopefully by tomorrow with Twifo and the Option Block, I'll be back to most of my fighting form out there. So we're going to keep it kind of light, kind of breezy today. Going to take on all comers with your questions. This is fun because Dan and I have been mostly live to tape for the last few weeks. He's been traveling. I've been traveling. I'm still traveling, but he's back now. So we're back live in your ear holes, and of course, on demand pretty much very, very shortly thereafter for all you folks hanging out on the on-demand side. Who's this Dan I'm talking about, you may be wondering? Well, of course, it is the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, also the author of one or two or half a dozen options-oriented tomes. Mr. P, welcome back to the program. How were your globe traveling adventures, sir? Did you also come down with the modern plague?
I think I escaped it somehow or another. But yeah, it was good. This was the first time ever that I took a 2.5-week vacation, and holy cow, let me tell you, if you can do it, that's the way to do it, man. I came back for the first time with my wanderlust gone, and kind of refreshed and ready to get back at it. Well, kind of. I'm still feeling a little bit La Dolce Vita over here.
What was the coolest thing you saw and or did and or ate in Italia, sir?
I will tell you the coolest thing that I did and saw was something that I had been looking into doing for 10 years, because that was the last time I was in Italy. It was 10 years ago. We went to Siena, and we sat in the main piazza there, Il Campo, and the server, we were sitting there drinking wine one night, and the server was like, "Oh yeah, you should be here in July when they run what's called the Palio, which is a horse race all around this like comparatively small piazza. It's not like it's not like Churchill Downs or anything." And I went this year, July 2nd. And it was the craziest darn thing that I have ever seen.
They murder each other while they're doing it, don't they? It seems crazy.
Oh, yeah. I mean, there was, hopefully there's no animal rights folks listening to this here, but, there was a horse that like hit the wall and fell over. It was kind of sad. Like jockeys are like hitting each other. After the race, like everybody just jumps onto the racetrack, while the horses are still slowing down. It's like mass chaos. Like me and my son were walking, there's like blood on the, on the racetrack. I don't know if it was from a horse, a jockey, or a fan, or what, but it was crazy, man. It was just a crazy thing.
Yeah, when I was in Siena, it was right around the time I think it had just happened, and you could see kind of all the signs were still up and everything, and it seemed like a crazy spectacle. Then there are still some elements when you get to certain parts of Italy that are reminiscent, shall we say, of the medieval times, and that certainly is one of them. You could definitely see a little bit of you feel like you're going back in time a little bit, seeing a spectacle like that, I would think. So yeah, that's pretty crazy. I've been to Siena. I've seen, their half completed cathedral. They had to kind of stop it right in the middle because of the plague, so all sorts of, it's a crazy town and crazy area. But yeah, that's a fun one. I have not seen that. So interesting stuff. You know what else is fun, Dan? A little bit of the old mail call. So let's get to it.
Mail call. Time to look at questions submitted by our listeners.
All right. Always festive. The mail call out there. Feels like it's 4th of July every day when we're doing this show. Depths of winter. It doesn't matter. It's always 4th of July here when we're doing the mail call. Yes, it's time to answer all of your many and varied and pleasant and fun questions over there. Let's start, Dan. We have a fun question of the week going right now. Let's get the pulse on this one first. Our question of the week is probably going to be very interesting to this audience as well. Our question this week is, it's time to spread your options trading wings. In particular, which, quote, spread with wings is finding its way into your trading arsenal right now? Gave the folks 3 choices plus the infamous other, Dan. We gave them Iron Condor, Iron Butterfly, the old traditional butterfly, or other. And Mr. Dan, this has been live. Looks like for, I think, about a day or so out there. And if you have a choice of one of these spreads with wings, or perhaps you have an other you want to write in, have at it. And then B, more importantly, what do you think our audience is voting for, sir?
Well, I'm going to go with the straight Iron Condor. That's what I think. That's just a time-tested, old standby.
Wow, Iron, you're the second person that I've talked to that guessed Iron Condor. Are they back now? Is this all of a sudden a thing? They were hot, I know, for a while, like 10 years ago. And they kind of have faded from view. But okay, Iron Condor. You think that's what the crowd's voting for too?
That's what I'm thinking. We'll see.
Well, it turns out you're right now. 47.1% of people are choosing Iron Condor. That surprises me. I would not have picked the old Iron Condor. Now, we put it first kind of for fun, but apparently the folks are going for it. Then we have a tie for second between Iron Butterfly and Butterfly, both with 23.5%. That surprises me that Iron Butterfly I thought Butterfly would kind of run away with it. And then at third is other with about 6%. And unfortunately, I don't see how many folks, if you choose other, we tell you have to reply with your answer. What is your other? What's your other spread with wings are you doing? Hit us up, let us know. So 6% are doing some other funky spreads, Dan, that we have no sense of. All right, let's go out to some of the questions that the folks have here. Again, kind of a nice, easy, breezy, beautiful mail call episode to kind of catch us up on what you folks have been asking. You guys have been hitting us up. Obviously, we've been gone for a few weeks, so got to clean out the old mailbag. Let's go to Tom first. Tom S. Tom has a pretty straightforward question, Dan, but maybe there's many layers to it. I don't know. He wants to know, Dan, are you ever going to write another book?
Oh, man, I have been fantasizing about that for a couple of years and made a couple changes here in our operations. So, we might be moving closer to that. I think Kathleen will probably kick me out of the house if I tell her that. But it's a good solid maybe.
So you say you made changes to your operations. So you're saying they finally fired you over there at MTM, so now you have the free time to write a book? Is that what you're saying? They finally wised up to your charade, sir. Get that guy out of here.
Exactly.
Get that Passarelli guy out of here. He's holding us back. So that's a firm maybe there for Tom S. Now, he doesn't say an options book. You can write whatever kind of book. You could write an Italian travelogue. What do you think, Dan?
Oh, man, I would love to be a travel writer. I told Kathleen about that. I was like, yeah, we should do some travel writing. And she's like, you are crazy. That's such a competitive thing.
I think Rick Steves has Italy locked down, unfortunately.
Exactly. How do you compete with Rick Steves?
That guy just gets paid to just go to all the best places over and over again. Yeah, not a bad gig. Let's go here to, let's see who we got next. Let's go to Mix. Just Mix. Mix wants to know, what do you guys think will happen to options trading and commissions if they dial back payment for order flow the way the SEC is talking about? This is interesting. This has kind of been a more recent development, Dan. We haven't really talked about it on the show, but the SEC, as he mentions, is floating out some feelers there about perhaps changing this payment for order flow thing. That has been highly controversial since it launched. Back when, it's been around in stock for a long time. When it really came into play in options was around the onset of multiple listing listeners. So around 99, 2000, when all the exchanges started listing everything, and all of a sudden there was a competitive marketplace for everything. All of a sudden, the notion of paying people to route orders to different venues suddenly became a lot more enticing than it was before. And even then, I remember at the time, Arpit and the Intel crowd in SIBO, we sent the SEC just reams of data saying, look, these are actual trade throughs. These are examples of customers being actively disenfranchised by this practice. They are getting a worse price because this order router was routing to a place where they were getting paid more. And that was not supposed to be the case. Then, of course, linkage happened. All these other things happened that kind of mitigated some of that practice. It is nowhere near as bad as it used to be in those crazy early Wild West days. But still, even then, the SEC was like, we're going to just kind of punt on this. We're not really going to say it's great. We're not going to say it's bad. We're kind of just going to put a more towards kind of a wait and see approach. That's what they've done for the better part of 2 decades now. And it seems like finally, Dan, that wait and see approach may be coming to an end under Mr. Gensler there. So what are your thoughts here, as Mix wants to know? What do you think will happen to options trading and commissions if they end up dialing back payment for order flow, sir?
I don't know. I asked myself this a number of times, and definitely, to be fair, in the beginning, and to some degree now, I've been an opponent of payment for order flow because, it is a little bit of a conflict of interest, I think. And I struggle with the question of, do retail traders benefit from it or get hurt from it? And I think the answer is probably both. Surely commissions go up a lot if that happens, right? Because right now you're not your broker's customer, really. Like your broker's customer, like you're the product. The broker's customer are the people, or the market makers who are paying them for order flow. That's where they make the bulk of their money, So commissions would have to go up. It would really restructure brokerage firms a great deal. and we'd probably see a shakeout. We'd probably see some of the smaller firms go bye-bye, and probably we'd see some of the larger firms continue to merge to capitalize on economies of scale. And I guess I do wonder if it would hurt option trading a little bit. I hope that wouldn't be the case, because, look, like, I love the fact that you can trade options for less than $1 a contract now. We would return to the days where it would be, probably a ticket charge of $7 or something like that first. But truth be told, when I was a market maker for Fawcett, like, part of the business model working with Fawcett is that he'd kind of tack on a little bit to the commissions and exchange fees that I would pay. And like right now, I'm paying comparable to what I was paying as a market maker. I think if commissions went back up, a lot of people would be like, oh, no, these commissions are too high, but I think they traded anyway. I know it's kind of a long-winded, hopefully not rambling answer, but there's just a lot to unpack there, and there's a lot of facets to look at, I guess. I don't know. I think it would put a small dent in option trading volume, but I would hope that it wouldn't be that bad, I guess.
That's interesting, because the obvious response is, right, well, commissions have to go back up. But how do you put that genie back in the bottle, right? It's been so infamously released from the bottle now, thanks to Robinhood. It's kind of hard to go back the other way, right? Do we go back to the days of ticket charges and, all this other stuff? It's hard to see a lot of customers stomaching that. But yeah, you're right. We could definitely go back that way. One of the interesting things they're talking about, too, with this payment for order flow approach that they're taking, is trying to leverage what's been going on in the options market for a long time, which are these auctions. They're going to try to rely more on auctions to try to make that process more competitive. If you know anything about the options market, auctions are in and of themselves, they're not exactly a well-loved mechanism. They're very controversial themselves for a variety of reasons. If you go see an options chain right now, you're going to see it maybe a little bit wider and a little bit thinner than what is the actual liquidity, because the market makers know there's going to, once an order comes in, it's going to be entered into an auction mechanism, and most of the big exchanges have these now. And that's where they're going to do a price improvement auction, and then the liquidity providers can kind of show their best hand and say, okay, it's a 10 lot. I see the order now. I'm not just $1.50 bid. I'll pay, let's say, $1.60 for that. And I actually will take that down. And that's where you get, that's be a nice price improvement. You're probably not get that much, but it's a good example nonetheless, a hopeful example. So that sounds great, but it also clearly you're seeing more of a fragmentation of liquidity and a disguising of liquidity as a result. So the market you're seeing on the chain is going to be thinner and wider than what is reality. And so if this becomes the lay of the land, you might see that spread across a lot more markets, and that could compound an issue that people still have with auctions to this day. So yeah, it's kind of replacing one controversial practice with another, Dan. And it'll be interesting to see if that actually gets approved and this actually happens. And if they can put the genie back in the bottle too. I don't know if we can ever go back to the way it was, Dan, with the kind of the full board and the commissions and the big heavy ticket charge. You think we can go back there, Dan?
I think we would have to. I mean, I don't think that there's a choice, because brokerage firms cannot make money just on commissions. It just would not be a sustainable business model. So, yeah, I think it would we would have to go back to that, I think.
I'm just glad I'm not in the brokerage game right now. You had for a decade, you had no margin money. That was a big profit center for them, right? That went away. It's starting to come back a little bit now, but still, it's not a great business. Transactional business got killed by Robinhood. And you have the payment side as the other leg of the business. A lot of them have been leaning on, and that might go away now too. Hence, look at Robinhood stock, right, listeners? They've been coming for it like crazy because of all these rumors swirling around PFOF. So I think for Dan and I, it's still, like it is for you, Mix, an open question. The knee-jerk reaction is we got to go back to kind of the way it was, but I think there'd be some pushback on that. I think it'd be interesting. I think the customers are now used to this market and environment. And that just said, we had the folks from IB on our Pro Q&A yesterday, and they're obviously very anti-payment And so there are firms that are kind of prepared to operate in this environment without payment. And they think, people should pay a commission for a reasonable execution. And I'm with that as well. I think you should pay for something decent. If you're not paying for it, usually you are the customer at the end of the day, and your execution is probably going to be subpar. So if you're getting a little bit of a better execution, even though you're paying for it, it's going to work out for you in the long run. But still, a lot of customers who have come to the options market in the last year to 2 years, that's not a message they've been getting. They've been getting the Robinhood, everything free in your face, the Weebles, that kind of stuff. And it might be a little bit harder for them to swallow that message. Let's put a pin in that one for now, Mix. Maybe we'll come back to it a little bit when we have a little bit more granularity and clarity on exactly what the SEC wants to do, if it's going to happen, in a time frame for it. And then we think we could speak with a little bit more intelligence on exactly the impact it's going to have, because it's still very much an open question, but a good one, Mix. We will come back to that. All right, let's go to Elote, or perhaps Elote. Maybe they're a fan of Mexican street corn. I don't know. They want to know, is it harder or easier for Dan to find names to raid in this down market, Dan?
The thing about the short squeezes is that they are somewhat, not entirely, but they are somewhat market independent. So like we do see some of that. Now, truth be told, like we talked about at the beginning of this episode, I have been, out of the country for like almost 3 weeks and just kind of getting back into the swing of things. I made my first trade yesterday. So I haven't had my eye super keenly on it, but just conceptually, it doesn't really matter that much what the market's doing. And it is really nice when you have, all the meme activity and Reddit activity, and you get, because you can really get a lot of wind in the sails. And you do have a little bit less of that now, but Options Raider is designed to find pure short squeezes as well, which, those have happened for, a century or whatever. So, they're still out there. If they're a little bit harder to find, no big deal. I want the good, I want quality, not quantity.
He just got back from Italy, folks. Give him a chance. He's still living the Dolce Vita. He's having gelato. He's taking his evening constitutional with his Chianti. He's got to get back to the hectic American lifestyle first. That's the danger of going to Italy, Dan. I haven't been there in a while, and the danger of going there is once you come back, you're like, why did I leave? That place was amazing. And you kind of get infected with that. Like you said, the Dolce Vita, you get infected with that Italian lifestyle, especially in that Tuscany area. That's my favorite. Just the food is great. The wine is great. The history is fantastic. You could spend a lot of time there. So once I recover from the modern plague, maybe I'll head that way myself. Speaking of recovering, P&L Man in the chat says, you sound better today. Hope you are feeling better. Yes, I am feeling better. Thank you for everyone who inquired and was concerned. I was feeling pretty dire earlier this week, that's for sure. You probably heard it on the shows. But you know what? The producers don't care. They crack the whip. They say, you get on that microphone whether you're dying or not. I'm just a pretty voice here on the mic at the end of the day, listeners. Also, back to the live chat, Unlimited saying 60. Oh, he's talking about what we were just talking about with the payment. He says 65 cents a billion times a day is enough money. The brokers don't need to go up on fees. Then he corrects himself. So a billion times a month. He said, imagine if a billion contracts traded a day. Yeah, we're not quite there yet. Imagine a billion option contracts a day. That would be something. We're closing in on a billion a month. But he's right. Roughly a billion contracts a month, 65 cents. That's a decent chunk of change for all the brokers to split up, Dan. They don't need to get greedy. They don't need more. What do you think?
Yeah. Well, you got to take into account the costs and such. I don't know. It's been a long time since I really dug into these numbers, but anybody who's curious, go and grab the income statement for some of the major brokerage firms out there and see how much of their profit or see how much of their revenue actually comes from commissions relative to other sources like payment for order flow. And I don't know. I think that they could not make it work. That's what I think.
What other costs could they possibly have? So it's not like they have like personnel and development and offices. They don't have any of that. All right.
Parties,
daily lunches, like Gibson's, all that good stuff.
Yeah.
That's what they're paying for. All right, let's go to Beats with a Z. He or she wants to know, what do you guys think of selling puts in SPY at around 3,400. Seems like there are some decent premiums available, especially if you get in on a nice down day. We've had questions along these lines a lot lately. 34.5, 3,600, 30. His level is 3,400. What are your thoughts on selling some puts down in SPY at that level, sir?
3,400. 3,400? Are you kidding me? I don't know. I mean, are you really good? Let's take a look here. So 340 in spiders. I don't know. I don't think you're going to get much without going way out in time. Let's see here. Let's look at a 30-day option. Well, geez, the 340 level. Yeah, I mean, it's a 32 volatility there. Well, I don't know. That's a little bit interesting here. We're talking about a good 12-something% or something like that. Well, that's interesting. It's interesting. I
think I can hear Dan's gears spin. I think we have a trade coming for MTM. I've looked around these levels in the past, and I kind of had the same reaction you did. At first was like, I don't know, 3,400, 34. Then I looked at it, I was like, oh, there's a little more juice there than maybe you might expect. Obviously, we're coming today when we're looking at it, we're kind of just reversed. We were selling off. We got down to, I believe, how low did we get today? It looks like around 37.67 or so, 66. So we sold off pretty hard today. So there could still be a little bit of that juice lingering in the put wing there. Obviously, the trade-off beats is going to be, I think the strike we can all get behind. It's just how far out do you want to go to really capture a decent amount of juice? Especially, as you mentioned, on a nice down day. If you had sold these maybe an hour or two ago, you could have gotten probably a decent level for them. When there's blood in the water, that's when you want to be out there selling these puts, because then these things are nice and juicy. And then you get the reaction that Dan just made, like, oh. I can hear him clicking right now. He wants to go. He wants to sell some of these puts. But yeah, normally you'd have to go out pretty far. In this kind of environment, people are bidding up puts. So I don't hate it. I don't hate it at all. And the nice thing about it, I think Dan's reaction shows you don't have to go out as far as you normally would to sell a put at 3,400 to get a decent amount of income. You don't have to go out 8 months or 6 months or anything. You can go out much closer. So I don't know, Dan. It sounds like you might have your next trade of the week here. You selling some 3,400 puts now in SPY?
I'm looking at it. I'll tell you that.
I love when the listeners give us trades. That's great. That's always my favorite. But yeah, this level 34.5 we were looking at last week. We had a listener ask us about that level. I think it was last week, and that I had the same reaction. I was like, oh, these are juicier than I thought. And yeah, you don't have to go out as far. If you go out a month, you can get a decent amount of juice, certainly in regard to how much capital. Now, again, there's no free lunch. You're going to have to tie up capital to do this. In terms of the cash secured put, go listen to our episode on cash secured puts from a few episodes back. If you're confused about that, that'll walk you through the calculations your brokers will do to tell you exactly how much capital to tie up. If you don't want to tie up that capital, then you'll have to do a put spread instead and buy another put farther out of the money. That's obviously going to reduce the income there, but it also will free up more capital. So it's up to you. Tie up the capital or get a little bit less premium to do it. But I don't think either of us hate it. Beats. Let's go to TVVIM6. That's a memorable one. They want to know, what is the biggest mistake you're seeing people make in this market, Dan?
Oh, boy. I'll tell you what. The biggest mistake that I see a lot of people making is just not realizing that the paradigm has just changed. I talked to a lot of people who, made a bunch of money between 2010 and 2020 and, they just say, oh yeah, I sell puts. That's what I do. I sell puts. And, the stock market just went straight up with a couple of dips here or there in that 10-year period, and implied volatility is always overpriced. I offended one of my students once by saying, a monkey could have made money trading options between 2010 and 2020. It was a no-brainer. Just friggin' sell puts and you'd get rich, but it's just not that way anymore. And so the biggest mistake that I see people make is pulling back from their education in a time when education is the single most important thing, because there's great opportunities out there, but it's just different than it used to be. Like now is the time to learn. Back over that 10-year period where people could just sell puts, like people would come and they'd sign up for classes and, they'd learn, they'd become better at selling puts. They become better traders. But like now people are just like, oh, no, it's too hard. I got to cancel my classes. Like, why would you do that now? This is the time when you should be doing more learning and really, honing your skill, your craft, and getting good at it, and taking advantage of these opportunities that are amazing in some cases.
Yeah, I think that's a good way to put it. The paradigm has changed. The biggest mistake I see is along those same lines. People have been riding this elevator up, right? And they've been loving it, and especially the last couple of years, it's been a rocket ship up. And then now, unfortunately, you listen to a show like this, the whole point of it is to help prepare you for the moment when the worm turns and the elevator goes crashing back to earth. You don't want to ride it back down. And unfortunately, I'm still hearing from people who are listening to the shows saying, oh, I'm still in. I've been riding the S&P the whole way down. And, what do I do now? And you're like, no, you need to be nimble with these things. That you want to ride the elevator up and then get the hell off, or at the very least, put some cushion in so you don't fall the whole way back down. We've done polls, and we've been, of course, talking to the audience and things, and just hearing from people that there still are a fair number of people out there who have just been wearing it all the way back down here. And I hate to hear that, So, yeah, the paradigm has changed. It is not a meme stock palooza. The Fed is not backstopping everything anymore and buying everything with both hands. So we're not just going to shoot straight up. And so you need to be prepared for this environment where we're going to be choppy, if not straight down. And so as long as you have a game plan for that, maybe you are in cash right now and you're looking to buy at a lower level. There's nothing wrong with that. I mean, obviously, inflation is high. You don't want to be in cash forever. There is an opportunity cost to that as well. But if you're waiting for a more opportunistic level, there's nothing wrong with that. Cash is a position at the end of the day. Maybe you're starting to pick your levels. We're talking about 3,400. Maybe you picked a different level in the S&P or whatever index or single stock you trade that you want to start selling puts in. These are times you might want to start doing that if you have the capital to put to work there. And if the market turns, you still keep that premium. If it doesn't, you get an underlying at a nice, attractive level. So either way, you kind of win. So you have to be prepared for this new paradigm out there. And that's what a show like this is for. So if you guys are having questions, having a hard time navigating these waters, we're here for you. Hit us up. Let us know. And we'll see if we can all walk through it together. All the fun. I'll get out of here on this one, Dan, and I will rest my voice for a bit. Let's go to Anthony Esposito. He says, what is a reasonable allocation to options that most people should make in their portfolio right now? Is 20% too much or not enough? I think he wrote into the wrong show if he thinks we're going to say too much, Dan. What do you have to say here for Anthony Esposito?
It depends. It depends on a number of factors. First, what I always love to talk about in these scenarios is, are we talking about you being a trader and investor, right? Because that's a whole different way to look at things. I'm presuming we're talking about being a trader. And look, when I was a professional trader,
I think Dan just sold those 3,400 puts in SPX.
Yeah. When I was a professional trader, my allocation was like, I don't know, 400% or something, right? Because that was my business. And the amount of money that I had in investments, personal investments, was comparatively puny to that. And I was trading options on extreme leverage. But that's when I was trading as a professional, and it was my business. And so folks who are really, really good at it and have honed that skill and have gotten the education and the experience and you can make money, 20% is not nearly enough, right? If you're really going to make a business out of it, it's not nearly enough. But while you're learning, 20% is probably too high. You want to keep it nice and small, trade some 1 lot, some 2 lots, some 3 lots. Or better yet, the best way to look at it is to say, trade less than $500 per trade or something like that. Do it in those terms, because a one lot in Google is a lot different than a one lot in Ford, right? So, yeah, the amount of experience you have, the amount of realistic confidence that you've proven from experience that you can make money matters. Your capitalization to some degree, if you have $1 million account, it's easier to trade a smaller portion of that and still make enough to potentially live on, versus if you have a $3,000 account. I mean, you're going to have to trade a higher percentage of it. So, very long-winded answer, but I like to give accurate answers and not just throw something out there. So hopefully, Anthony, that helps.
Dan, the show is called Options Bootcamp. So the proper percentage is 100%. If you have a single share of stock in your account, you're doing it wrong, sir.
What's the matter with you?
That's what this show is all about. Don't write to me with your freaking stock. It's called Options Bootcamp, baby. 100% or nothing. All right. Maybe I'll give you 99%. Dan. You can have 1% extra. How about that? The stock is the alt in that scenario, not the option. All right, that's going to do it for our mailbag this week. If you guys have questions, you guys are not shy. You know where to hit us up. At Options is probably the easiest place to get us. Questions at theoptionsinsider.com. That also works. And, of course, all you pro members, you can hit us up by your members hotline, or, of course, hit us up on the live stream if you're listening live as well. Glad that I'm doing better, Options Queen. Thank you, Options Queen. Thanks for all of you who have been concerned about my health. You're nicer than my producers. They just crack the whip and say, get back on the mic. Yes, I am feeling better. Hopefully by the time of tomorrow and the double dose of This Week in Futures Options and Options Bootcamp, I will be able to put together more than a few sentences without breaking down into coughing, even though I'm feeling a little better on that front today as well. So, Mr. Dan, before we go, while I go to rest my voice and you go to sell some more 340 puts and SPY, if folks want to hit you up with these kinds of questions or anything else, where should they go? What should they do?
We love to hear from you. We love you. Come to markettaker.com and first of all, get a free access to part of our site. And when I give stuff away for free, I make sure that it's really good so that you get to experience what it could be like working with us. So there's really great content on there, especially for beginners. And if you have some questions, hit us up. You get free access to our chat room right now. You can DM me in the chat room. You can just hit the contact us button on our website. But just make your way over to markettaker.com and go from there, my friends.
MarketTaker.com is the place to go. We have to get on out of here. Back again tomorrow, listeners, as I mentioned, for our double dose of the option block and This Week in Futures Options. Friday, another double dose, my voice. No rest for the wicked. Friday, ball views. And then, of course, after that, we have Options Oddities for all you cool kids in the Secret Club. I think the Rock Lobster returning this week, so that should be fun. And then back again next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.